not all investments are appropriate for every individual. Investor Signals provides a broking account service which includes access to our model portfolios, both ASX and US markets, as well as an independent portfolio where we can work in partnership with you to execute ideas that we jointly agree on and utilise derivatives to enhance portfolio returns. If you'd like to know more about our broking account service, please call me on 1300 614 002. The technology that I'm using tonight is the Investor Signals member area. You can subscribe to it for $1,320 for a year, and you can access a free trial by visiting investorsignals.com. The graph up on screen there is the Nasdaq, and what we're interested in at the moment in the market is we still appreciate that the technology stocks in particular in the US are trading on very stretched multiples, and we've looked at that in prior weeks in great detail. For the most part, the market's overextended itself. It's corrected roughly 10 or 12%, and it's rallied back 50% of that sell-off. Now what we need to see is this a level where the technology sector runs into resistance again and has another leg lower? Or do we get an environment where the technology sector can mostly move sideways and we start to see some of the sort of undervalued areas of the market have money rotate into those names? But certainly from a technical analysis standpoint, we remain cautious on this 50% bounce in the Nasdaq, and let's take a closer look at that in the member area software. So I have it set up that under my watch list number 1, I have the 3 indices. So if we go into the top one here and have a look at the Nasdaq, this is what I'm referring to there. We've had the correction from throughout September, roughly around 12%, a rally back. It's extended just a fraction past that 50%, and you can see there that I've just put in an overhead resistance line there, which pencils out at around 11,350 points on the Nasdaq. We'll keep an eye on the shorter term stochastic indicator just to see if that rolls over and we get a test of lower levels. Where the picture gets a little bit unsure at the moment is on the other side. We see buy signals on the S&P 500 and starting to turn up on a number of the global broad market indice ETFs. So in the case of the S&P 500, you can see support there at around 3,200, and what we may be seeing is sort of more of a consolidation here. So we're only a week away from third quarter S&P earnings being announced, and there's still some risks where the market's looking for a recovery in earnings of roughly 20% in the third quarter, and does that materialize, or is there a pickup in volatility around the earnings release and the US election? But within the market, there's obviously opportunities that we see as suitable risk reward, and part of tonight will be to focus on those. With that, so I go on to the watch list, and rather than toggling through the top 100 tonight, what I want to do is just review the recent blog posts. So if you come into the members area, go down to recent blog posts. This stores the last 30 days of stocks that have been tagged on the daily blog. We click on that, we get the percentage gains to the top, organise it in buy order, so we're going to be looking at the best percentage performer going through. For the most part, these are all under buy conditions, and I'll provide some commentary around which ones we prefer from a timing standpoint. TPG, this synergy cost from the Vodafone merger should help to underpin downside risks here, so we've been buyers at TPG on this sell-off and looking for it to move higher. Medical Developments International, this is a stock that I've just added to the list at the request of a client, and we're starting to just monitor that. I've updated a post on the blog so you can go in and search and read up, and I'll continue to follow that as we see earnings results come through. Ramsay Health Care, so this has been sort of one of our high conviction portfolio holdings. in most cases we own it and we've sold covered calls over it to drive extra return. We're turning that from a 3% yield into an 8% yield. We think that earnings are likely to be relatively flat over the next 12 months, but the longer term story there's still attractive in a low interest rate environment, so Ramsay's a buy on the dip. APA Group, again taking a sort of 12 to 36 month view here on APA Group, we think it can trade back up towards $12 and higher. The next 6 or 12 months, the earnings pitch is probably at very low single digits, but certainly has the capacity to drive earnings growth back up into that 6 to 8% range. So buying APA on the dip makes sense to us. Gold Road Resources, so gold's corrected from roughly almost 2,000 an ounce down to 1850. The US dollar's strengthened, which has soured sort of some of the interest in the gold trade for the moment, but ultimately we see that as a buying opportunity. So in the case of Gold Roads, they've had technical issues that have impacted production, but we don't see those as sort of material long-term concerns. So buying, whether it be Newcrest, Gold Roads or Northern Star, is essentially our basket, or the GDX, which is the gold ETF, but Gold Roads around that 140, 150 is in an accumulation range. Brambles, buying this on the dip down here at around $10 to $10.50. You're getting a little over 2.5% dividend yield and likely to see 5% earnings growth, which is good in an environment where there's certainly still a lot of earnings uncertainty. Orica, I think the risks here are a little bit higher than some of the other names that I've mentioned, but buying Orica on this weakness and around that support of around 1550, get a little bit more cautious if we see it reverse lower and take out that sort of $15 support level. Iluka, this is a new one that's switched to algorithm bias signals. I'll provide further update on the blog around Iluka and the spin-off of the mining or the resources division from parts of the mineral sands operation, and I'll provide further details on the financials in that blog post, so keep an eye on that over the coming days. But Iluka switched to buyer conditions. You can see I've put support there at around that 880, and if we saw a retest of that lower level there at $8, that's gives us a range there between $8 and effectively $9 almost as to where we're looking for Iluka to develop support. Bega, a break below $5, and you may want to take a look at this. If you want to sort of be a little more aggressive, you could take note that the stochastic's starting to turn up, pulled back a little bit from the highs today, but support there at $5, and you could just simply run a stop loss below that and then wait for the stochastic to reform. But roughly 50% of this range that it's had sort of puts us at around that $4.95 to $5 level there as a entry level for Bega, and the reason why we're attracted there is their forward earnings guidance was quite strong. Fortescue Metals, buying this on the dip at around $15. Ansell, owning this at around that $35 level, selling covered calls. We think that the earnings growth is likely to be high single digit for Ansell, but you are paying a premium for it, so owning it and selling covered calls is the right way there. Fisher & Paykel, we've added this into portfolios, bought this on the dip off the back of the recent algorithm buy signal there at around $29. Again, expensive, but one of the few companies growing earnings in an uncertain environment. Coles Group, corrected from $19 back down to around $16.75, now trading $17.40. This is one that I've been highlighting on the blog. We can see the build-up of accumulation buy signals just there, supported around $16.75. I think Coles can push back up towards $18 and then look at selling covered calls. Cleanaway's corrected from $260 down to trade, I think, a low around $206, $207. Closed today strong up on the session highs at $211. we've added that into the high conviction portfolio and see that as a buy on the dip opportunity. A2 Milk back down at around this $14 level, so we do own this stock. Obviously we've seen a downgrade to both revenue and profit growth impacted by disruptions to their distribution channel, mainly into China. It is on a high PE, low and no dividend yield, so not much margin for error for a miss there on the revenue side. But at around $14, I expect we're pretty close to where we find support at the moment there for A2 Milk. Sonic Healthcare, we like this, growing earnings, probably somewhere around that 4 to 5% range. It is getting a little expensive, back up at $34, so owning it and selling covered calls is the right strategy there. CSL, owning this and selling covered calls. We've been getting good premium for the calls in this, but we initially had support there around that 267 or 270, then again at 280. So as long as it can hold above that $280 level, but owning it and selling covered calls up around the 300 or even 310 level helps to add yield there. Pro Medicus, we continue to like this name, and I've been drawing your attention to that one via the blog, but we own that in the high conviction portfolio. Oceana Gold, this was a algorithm buy signal, and like some of the other gold stocks, they've underperformed over recent weeks. In the case of Oceana Gold, they again had technical disruptions that have impacted their production, and they've recently raised money. I think it was 150 million Canadian dollars to help shore up the balance sheet. But again, our preference within the gold stocks is really Newcrest, Gold Roads and Northern Star, and then the GDX gold ETF. Cube Holdings, support that around 250, flat earnings for the next 12 months, but when we look out into F year 22 and 23, Cube could certainly be a business that drives high single-digit earnings growth, and we would be happy to increase our exposure to Cube on any sort of weakness back below that 250 level. ASX, we like this business, but I've spoken in detail about how the transaction trading volumes are likely to be flat or possibly even lower than the prior 12 months over the next 12 months. That sort of makes me think that ASX could test that $77 level in a weak market, and I'd look for it to consolidate, but certainly be happy to buy it and accumulate the stock within that range. Northern Star Resources, support there at around $13, so looking for gold to find support around this 18.50 an ounce. Technology One has a great track record of delivering both earnings growth and dividend growth over the last decade or more. For that reason, within the technology space, it's a stock that we continue to watch. They report earnings in March and then again September, so we'd expect to see those earnings results published in the coming weeks, and I'll update you on the blog as we look at that earnings growth a little bit closer. Newcrest, support there at around $30. The indicators at the moment are still moving lower. We're looking for that short-term indicator to move higher. The thinking around that $30 level there ultimately becomes a higher low formation, and support develops for Newcrest around that level. And there we are, back to TPG. Also for tonight, what I want to do is just go through the recent signals. So that's the last 30 days of stocks that have been tagged on the blog. Let's just go into the ASX signals. So if you've missed the 3:30 scan email that comes through in the afternoon, you can come into the member area here, and this stores the last 7 days of signals. So if we click on that list, and just as a habit, always get the percentage gains to the top, start with buy signals and move through. So again, these are all the scan results from our ASX database from the last 7 days. So here's an example of where we've got these large cap ETFs that are broad market based that have shifted back to buy signals, which ties in also with the S&P 500. So you've got that situation where the Nasdaq's overvalued, high PEs, and we've got maybe the resistance on that 50% bounce. But then in the other area of the market where we've seen, whether it's banks or Boeing, talking at an international level, big industrial companies where they're really sort of down, anywhere up to 50% from their highs of 12 months ago, which is starting to create like a value trade in the market where do we see money come out of higher PE names into those value areas. So we continue to keep an eye on that. So an example here is we've got the Vanguard Australian Large Company Index. So we've got support here there at around 57. So I just flagged that that's come onto the list. Metcash around 270. And a lot of these names are not stocks that I'm active in, but nevertheless it's just interesting just to toggle through them and have a look at where the buy signals are occurring. So the WiMax top 20 yield fund support that around that 675. Cleanaway, so this is a stock that we're focusing on, so that's been added back into portfolio. So we like the longer term fundamentals. We're mindful of the negativity in the media, obviously with the CEO's management style, and then also the issue where we've seen the CEO sell a little over $5 million worth of personal shares in the company, which is obviously raises some questions. But the correction from 260 down to 210, we assume factors in that. We know it's low growth earnings, but we do like the longer term thematic there for Cleanaway. So looking for this to find support, the stochastic to continue to move higher, and we'll continue to sort of monitor that as the trend evolves. Pilbara Minerals under buy signals there at around 30 cents, but not something we're too active in. Oceana Gold, as I mentioned, now under buy signals. Cube under buy signals. Reece Pharmaceuticals, so I've drawn a channel there just between sort of that 90 to $1 level. Stochastic sort of starting to turn back up, but we'd expect this to find support within that range there. Genetic Signatures, and not a stock that I'm too familiar with, but we might take a closer look at that and I'll update you on the blog. Musgrave Minerals, not really active there in their Vanguard Global Min Volatility, so this would be another example of where we're starting to see some of these global indexes come up under buy signals. Viva Leisure, not doing there at the moment, but again under buy signal. And then we're into a couple of stocks so if you're joining us for the first time, we've now sort of moved from the recent 7-day signals that are been under buy signals, and then you can see here a couple that are actually under sell, which is a reference to the marker up the top of the screen. Main Pharma under sell, and then back to the Vanguard, which is under buy signals. So just to conclude tonight, I wanted to go through and finish with a look at the ETFs that I like at the moment in the market, and then just ensure that you made a note of the 2 or 3 core opportunities in the market at the moment. So the Vanguard Global Infrastructure ETF, I continue to like the recovery opportunity there in that. Which is the iShares Healthcare. So this is Global Healthcare, IXJ. Should deliver sort of something in the order of 10%, 8 to 10% return over a 12-month basis. So we're looking for this to trade back up towards that really 105 to 110 level as fair valuation. So it is a slower growth opportunity. If you're looking for exposure in banks, one of the ways to think about that is the BetaShare Global Bank ETF. So you can see there for the moment I've just highlighted support at around 430, but I don't think we're out of the trouble spot with the banks entirely at the moment, and we may sort of see further negative sentiment, especially if we get volatility pick up in that US equity market, as I said, as a result of earnings or US elections. But for the moment, what we're looking at here in the Global Bank ETF is support there at around 430. It is above the short-term moving average. The stochastic's moving higher. And you're seeing that not just reflected in the global banks, but we're starting to see buying interest pick up in our local banks now as well. IOO, which is the global top 100 ETF. So this is just broad-based exposure to the global large cap stocks. Top 100 support there at around that $76 level. Again, get a little bit cautious if we saw that reverse back down. GDX and again, these are all just ETFs that I've in most cases flagged on the blog, but GDX initial support there at around that $51 level, and I'm just compressing a bit more data there so you can have a look at that. So we've had a correction from around 65 back down to 51. I'd be surprised if it gets down and tests the lower band there. So we're looking for this to find support sort of within $1 or $2 of where it's trading there at the moment. Just another one to think about on the global exposure, which is the Van Eyck Vector Morningstar Wide Moat ETF. And you can see they're supported around that $75 level. IXI, which is the iShares Global Consumer Staple. So again, fairly defensive with if we did see volatility pick up in the market, but the correction that this has had from 85 down to 75 should be support, and we could see that recover. Now, an alternative to going this global consumer ETF is obviously to look at just Woolworths and Coles at the moment as two significant opportunities in the market. And then finally on the ETF side, the Cure ETF, which is exposure to the biotech. I think this has found support at 52. It started to trend higher up towards 60. I can see that trading back into that 60-65 range. So just to recap tonight on the opportunities that I think you want to be focusing on. So TPG down here at around this 740 level stands out to me. Brambles at the moment on this little bit of added weakness that we've seen in Brambles around that 10 to 1050 level. And Cleanaway sits on the high conviction list now at around that 210 level. And to get notified when we add or remove stocks from the high conviction portfolio, we've now added in an area under the model portfolio where it's called High Conviction AU for Australia, and you just need to make sure you've turned on this envelope to receive an email notification when a stock's added or removed to that model. So tonight was just a brief summary. Next week we'll go through the top 100. And just to conclude tonight, let's just go back and finish on this NASDAQ and the difference between the two patterns we're seeing in the technology area to the broader S&P 500. So we know the NASDAQ trades on high PE. We know it's been a leading indicator for driving equity markets higher. We still are very cautious on valuations, and we recognise the NASDAQ's undersell signals. It's had this bounce, maybe up to 50%. It's running in a resistance, and we could get a test lower. If the NASDAQ corrected back down to maybe 9,500, that's when we'd see it shift back to buy signals, and we'd be willing to start building up an overweight exposure again to the technology area, and most likely through utilising ETFs like the Asia Tiger or the NASDAQ index. Whereas at the moment, what we're starting to just keep an eye on in the broader market is that we're beginning to see the early signs of some buy signals within the S&P 500 and also those sort of broader global indices